please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia. Well, clearly, I mean, as expected, actually, the global markets worried about Italy for a day, and now most of those worries are behind them. And you've seen not just the DJIA and the Nasdaq indices, but the Russell 2000 actually touching all-time highs. So the markets are not at the moment worried. But I would worry a little about Nifty, or for that matter, Sensex, Indian indices. The Nifty fell almost 100 points in the last 3 days, up until midday yesterday. But the recovery was bleak. And this is in spite of decent amount of good news. I mean, the earnings have largely been okay. The global markets have returned to calm. The dollar, the rupee improved substantially, and the monsoons have arrived a little before time. In spite of all this good news, Nifty did not make up the kind of losses it suffered over the last 3 days, not even a bit of it. So that could be a bit of a worry. But I would be very excited about the Nifty Bank today. Actually, there is a decent amount of good news in that index. First of all, of course, the way HDFC Bank has responded to the SEBI news that, you know, there can't be FII transactions. The ADR has risen by over 8%. There'll be a little bit of a rub-off in the domestic share as well. ICICI news, I don't think is going to affect that news, that stock itself very much. But generally, SBI has raised deposit rates. That in a rising rate scenario, banks are always advantaged because they have, you know, legacy cheap money. But most importantly, quietly, some of the NCLT cases have gone their way. I mean, Bhushan Steel has definitely gone. Electro Steel was cleared yesterday. Arcom was almost cleared yesterday. And Dalmia also looks like finally resolved. So some money is coming this quarter and next for the banks. And of course, today is Thursday. So my sense is today the more exciting index may be the Nifty Bank.
Okay, yes, it might be. Lata, good morning. Anuj, morning. Also, you know, talking about global cues, Brent, once again, it surged about 2% overnight. So it's almost at 78. And we're so correlated to Brent these days. So maybe that could be a hurdle as well for the market. The resistance of 10,700 could hold for the Nifty. But Anuj, morning, you know, we were talking about this yesterday as to how even in this volatile market, a lot of quality stocks are seeing buying, whether it's, you know, M&M, Avenue Supermarts, Pidilite. Even if you look at the Nifty this month, you know, the Bajaj twins, etc. Do you get a sense that despite all the volatility we are seeing, there would continue to be buying into many of these quality names? Is that the way to approach this market, build your portfolio now despite volatility?
Morning, Sonia. You know, that is always the case, you know, in market, whether it's bull market or bear market. I'll just make a point here. Today is not the day to chase either Bank Nifty or HDFC Bank. That was yesterday. Just like the shorting day was previously. You know, you remember yesterday my big bold call was that, you know, if there's a gap down, people will get trapped on the short side. You know, from yesterday's low, there was 300-point recovery, more than that, in the Bank Nifty. And the Bank Nifty is reflecting all the good news. It's closer to the highest point of the series, while Nifty is nowhere near that. The Nifty is likely to open somewhere around the 20 DMA of 10,660. The risk reward does not favor you to take a fresh long. You know, if in fact the opening is not as high as, you know, we think it could be, in that case perhaps you could try a long trade. But there's a risk that, you know, it sort of peters out somewhere around 10,700, and the market could trap again some weak longs today midday. It's like the market trapped the weak shorts yesterday midday. HDFC Bank also, the ADR move should not get replicated here, because yesterday the news was there in market hours. We broke it right in the morning, right? And also keep in mind, you know, what you've got now is HDFC Bank perhaps getting that premium back on the ADR front that it used to have, and also it's a bit illiquid. Of course, it will move, but I remember last time when, you know, when we had this news, HDFC Bank opened right about 8% higher, and if you chased it by the end of the day, you had lost about 6% intraday. There's a risk of that happening, and that could mean even for the Bank Nifty, after opening at perhaps the highest point, there could be some profit taking. Essentially, the market now is in range 10,550 to 10,700. The way to play this market is buy on panic and sell on exuberance. Today, if there's an exuberance, perhaps that would be a good time to take some money home. And as you said, for us, crude perhaps is emerging as bigger factor. Yesterday, the market reacted to that more than Italy. And today also from 75 to 78, it's a big move. So that would mean some worries are back for us.
No, the reason I asked you about the buying into portfolio stocks is because, last week, maybe a couple of weeks ago, there was a increasing fear that this market would break down on the downside. The range would open up on the downside. But now, since that fear maybe has been alleviated a bit, do you think it's a good chance to sort of build portfolios?
I'll tell you one thing, that what the last 2 or 3 weeks have told you. What the last 2 or 3 weeks have told you is that the likes of Manpasands and the likes of Strides and Granules should be forming only 10% of your portfolio. Because even if you have these kind of drawdowns, the rest of the portfolio, the Avenue Supermarts, the HDFC banks of the world, they'll take care of you, and Ashok Leylands of the world, they'll take care of you. The biggest fall has actually happened in rank bad stocks. Good quality stocks are still okay. Some of the stocks are actually hitting new highs. So that way, I think the market is still fine.
No, but that would always be the way to build portfolios, that you should be sticking to the avenues and the HDFC banks of the world. My point is not about today's rally or anything about Nifty Bank. Just to clarify, my point is there is some bit of good news in the banking stocks. I mean, these are not intraday moves. The solutions that you're getting in NCLT is a long-term good, and the market will take cognizance of that for sure, because today there is a bunch of good news coming from the NCLT for the banking stocks as well. This is going to impact even the Axis and the ICICI stocks very positively. I mean, they've suffered enough for the kind of results that they posted, losses, but now is the beginning of good news for banks that are inherently strong. And of course, private sector banks are definitely going to benefit in a rising rate scenario. They have huge current and savings account and a good retail portfolio. So things will work out positively for the well-run banks.
Okay, finally, it's the last day of May, so perhaps that sell in May and go away theory may now sort of not hold as we enter into the month of June. But let's take a look at what our wise men have to say as we head into trade this morning. Anish Damania of IDFC Securities says earnings performance ex-financials have been better than expectations. He says FY18 Nifty EPS grew at 5% year-on-year, and he estimates a 20% year-on-year growth in FY19. He maintains a Nifty target range at 11,550 to 11,980 for March 2019. Within Nifty, he likes Coal India, HPCL, Hindalco, NTPC, Hero MotoCorp, Eicher Motors, HDFC Bank and Maruti. So mostly all the market leaders is what he prefers.
Absolutely. Quality stocks, really. Well, let's get money market views. Thankar Patnaik of Mizuho Bank says the rupee's recovery through last week halted sharply on the political development in Italy and the resultant hardening of the dollar against the euro and renewed import demand in domestic markets, leading the way back towards 68 levels before an almost equally sharp rebound on Wednesday on expectations of government formation in Italy and of the fourth quarter GDP data today. He expects the bullish sentiment to continue for a while longer in the short term, with USD INR expected to be trading in a range of 67.30 to 67.80 before inflation and current account deficit concerns surface anew in a gradual downward trend. So for the moment, north of 68 is the expectation.
Okay, so let's tell you about the bond market as well. Tirthankar says that, the 10-year bond yield will remain in a range. 7.7 to 8% is what he's forecasting in the very near term.
Today, I think it would be negative because of crude.
Okay, yeah. Let's see how it moves, of course. Here's Mangalam then with the world view.
Well, there was green across the global screen, so the Dow Jones bounced back with a gain of almost 300 points, led higher by a lot of the stocks. We'll keep an eye out on that. The small cap index in the US, the Russell 2000 that is, that one too hit an all-time high. So the stocks that led the Dow higher, we had Boeing, Chevron, remember, because of the surge that we saw in the crude prices from 75 to 78, and Home Depot as well took the Dow higher. We keep speaking about the FANG stocks, Facebook, Apple, Netflix, but the big boy Microsoft as well hit a record high in yesterday's trading session. All of that came by from the optimism coming in from Europe. So most of the European indices opened and closed in the green. That was because Italy, that index, which fell about 2.7% in the previous trading session, has gained about 2%. And now reports suggest that political parties are seeking a point of compromise. Sounds very familiar. Bayer, one stock in Germany, that one was up 4% as the US Department of Justice cleared the Monsanto acquisition. Apart from that, in the emerging market space too, we saw some green come by on both Russia as well as Brazil. Asian markets have taken heart to that, all of them trading in the green. The SGX Nifty indicates a near 30-point uptick.
Okay, thanks.
All right. Thank you very much for that, Mangalam. Well, actually, today is a fairly important day. We will have GDP numbers, of course. I don't think there'll be too many surprises. For the fourth quarter itself, the numbers are bound to be good, about 7.3, 7.4 on the GDP, because year-ago quarter was the post-demo quarter. Yeah. So the base was absolutely low. For GVA, I think it was 5.6 a year ago. So this time, getting a strong 7.1 GVA is not going to be difficult. As well, today you will get the tax data for both March and April. The March data was not released. So post-market, there is a lot of news which perhaps the markets could react to tomorrow. At the moment, no macro news. So let's shift to global macros again. Noted investor Mark Mobius spoke to CNBC. And here's a bit about what he expects from the US stock markets as a result of the massive outflows from exchange-traded funds. Just listen in.
Volatility of all these markets is increasing. You know, not too long ago, a few months ago, everybody was betting on a very low volatility, and that's not happening anymore. And that's going to affect all markets, including emerging markets. There's no question about that.
Then?
The problem now is the ETF situation, because more and more money is going into exchange-traded funds, and these funds move in the same direction at the same time. So if everybody's heading for the exit, it gets to be very, very complicated and crowded. So I think that's what's happening. That's going to be the next big crisis. I think a 30% correction in the markets is not unforeseen. I don't think that's going to be a problem. Since the beginning of 2016, we've had a tremendous bull market in emerging markets. Now there's been a correction, and I believe, of course, with the U.S. vulnerable, then, of course, emerging markets will be hit. But if you look at individual markets, there's tremendous growth. India is growing at 6%, 7%. China is growing at about the same rate. This is tremendous fast growth in these markets, and I believe that we're going to see lots of opportunities going down the road. Liquidity is not as great as, let's say, in the U.S. market. So with a lot of ETFs in emerging markets, you can have a big impact. Of course, that presents opportunities, because when you see a big correction, then there's a chance to buy. So I'm not afraid of it, but I'm saying to people, be ready for that kind of volatility.
Okay, be ready for a volatility across global markets, especially emerging markets. That's the word coming in. We'll take a break on that note, but on the other side of the break, we'll be back with CNBC TV18's top 10 list of stocks to watch for the day. The Bazaar morning call. We wake up this morning to positive cues across the Asian markets. The political drama in Italy has eased, so that is a bit of a relief. But most of Asia is moving higher today. The Chinese factory growth numbers were quite good, actually. They topped street expectations, coming in at the highest level since October 2017 at 51.9. So there you can see across the board looking good. But what are the stocks you need to watch out for as we head into trade today? Our entire research team is here to give you that very list. Anuj, what are you looking at? So
two non-index large caps, Sonia. One is XI. Now, you know, this has seen a bit of a turnaround after the results and continuous accumulation. Every day moving, you know, 0.5%, 1% higher and very close to hitting a lifetime high. I know the other one is really the one which is a, you know, bit of a case study, and we spoke about it at the day, you know, when the stake sale was announced from the promoters. It's rallied 15% after that minor correction, Avenue Supermarts. There's a good chance that the stock today hits a market cap of 1 lakh crores, which would be phenomenal.
Okay, that's quite a mark to watch. ICICI Bank is next on the list, but I actually, I would put Nimesh second to discuss HDFC Bank rather. ICICI Bank, the news of appointment of a committee, I don't think is really stock moving. This could well be a move of the board to give some kind of an answer to what SEBI has asked of them that you did not disclose. So this could be a way of, in some way, you know, compensating for what may look like non-disclosure earlier. But my sense is, like I told you before, ICICI, Axis, SBI could all benefit because of this rush of positive news from NCLT, and therefore you can see corporate lending banks at an advantage today.
Okay, that would be interesting to see. But really, the story of the day yesterday was broken by Nimesh, HDFC Bank. Nimesh, ADR moved 9% yesterday. I'm sure you'll be getting a lot of messages. You moved the biggest stock.
Well, you know, Anuj, the Indian stock may not react that much as to what the ADR was up, simply because the volumes are not very high in the ADR, and also the premium has to shrink there. But now the focus will be on the domestic share tomorrow, because tomorrow is the day when there will be a slight window of 1.5% equity which will be opened up in HDFC Bank for the FIs to buy. In fact, there are a lot of brokerages who are writing now that this is the last opportunity for the FIs to buy the HDFC Bank shares, because after that, because of the SEBI circular, which means that from 1st of July, FIs, the FI window is going to get shut. So no FIs can buy into HDFC Bank stocks or any restricted stocks going forward in the FI window. So that's the reason why you saw that scramble in the ADR yesterday, and probably that will spill out for the Indian stock as well. But the key would be, you know, the next trigger to watch would be the HDFC Bank QIP issue. My sense is it will be a combination of both ADR and the domestic issuance. So that will be the next trigger to watch out. But for tomorrow, because of the small window opening up, you will see some bit of buying coming in the HDFC Bank shares from the FIs.
So a bit of green possible today, but don't be carried away by that 9% on the ADR. That's the message from Nimesh, and congratulations yet again. I got a lot of calls in the evening yesterday as well, and alarmed calls like, how can they stop FII trading? In any case, let's move to the other big result that came yesterday after market hours, ONGC. Sonal?
Well, weak set of numbers, Lata. Big operational miss, majorly led by the higher exploratory and operating costs. Margins, they came in at 47.4%, down 680 basis points on a sequential basis. Crude realizations, they came in at $66.71 per barrel, largely in line what we were expecting, and are up 10% on a sequential basis. Kotak says that they're cutting the estimates of the company by 2% for FY19 and 6% for FY20, and also are reducing the target price. CLSA, on the other hand, says that though 4Q was a weaker quarter because of the operational miss, but they are still lifting their estimates due to higher crude and have raised their target price to 240 versus 225 earlier. But expect the stock to be in red today. Back to you.
Okay, thanks a lot for that. But let's move on to some good numbers. Nigel, sales numbers operationally looked good?
Yeah, they looked good actually, Sonia. It was a beat on the top line, it was a beat on the operating profit, as well as in terms of net profit. Now, the top line itself, there was a beat of nearly around 400 crores approximately. The operating profit came in better than what we were working with. We were working with a number of sub 2,000 crores. It's coming at more than 2,300 crores approximately. Remember, this is the second successive quarter that they're reporting a net profit. The key aspect, though, is why is the finance cost going up, and has the debt peaked out? That's going to be important. Expect the stock to open up in the green.
Okay, good to hear that. Apollo Hospitals, Ekta?
Well, a good set of numbers, Lata, this time round. So the revenue was up in double digits. The margins also around 11.5%. And the hospital business was up around 10% The pharmacy margins still subdued at around 3.7%, but there was a little bit of an improvement. So overall, expect the stock to be in the green.
Okay, expect the stock to be in the green. So we have good numbers coming out so far. SAIL, Apollo Hospitals, all looking good. And Berger Paints was not too bad either, Mangalam.
Yes, Sonia, a shade better than expectations. You know, the revenue growth of 17%, the street was expecting around 15%. The margins were, maintained, if not better than expectations. 15.4% is what the company posted, as against 15.2%, which our poll threw up. The net profit at 106 crores, that was below estimates of 118 crores, and that's primarily because the effective tax expense came in higher. So, by and large, the numbers were pretty much a shade better than expectations. Just keep an eye out on the gross margins. They've been coming down because crude prices are going higher, but 17% revenue growth is something which I believe is better than the volume expectations that we had of 10 to 11%. The management is joining us. We'll pose the volume question to them.
Okay, Mangalam, thanks a lot for that. Ekta, what about Torrent Pharma?
Well, good numbers, but not really comparable on a year-on-year basis because of the Unichem acquisition. But margins at 21% and the profit was up around 11%. So overall, you can expect the stock to probably be steady today.
Okay, and some more numbers. Sonal, what do you have for us?
I'll start with Jammu and Kashmir Bank. Weak set of numbers. The profits, they went down by 61% sequentially at 29 crore rupees. We got another weak set of numbers. The operating profit margins, they declined by 330 basis points. All this leading to a profit decline of around 30%. That's why I expect the stock to be in red today. Deepak Fertilizers, another weak set of numbers. EBITDA went down by 34%, majorly led by the higher operating costs and other expenses. Operating profit margins went down by 550 basis points, but profits that increased by 10 times, majorly led, that doubled to 54 crores, majorly led by the other income that increased by 10 times. WPIL, good set of numbers. The revenue that went up by 63% and the margins expanded by 1200 basis points. That is one stock I expect to be in green today.
Okay. All right. 2 red, 1 green. Anisha, what about your list?
Well, Lata, I have a few stocks and I'll start with the red one first. Suzlon did not perform well this time around. The revenue has more than half to 2,200 crores versus 5,000 crore last year. And the company reported a loss on the bottom line of around 500 crores versus a 600 crore profit reported last year. But the guidance for the next year is strong. They're talking about a revenue number of 12 to 13,000 odd crores. Remember in FY18 it was around 8,000 crore that they reported. So let's see how that one reacts, whether to the guidance or to the numbers. Moving on to KNR Construction. It was a very good set of numbers. The revenue went up by around 30%. The margin expanded by 530 basis points, and I think the margin would be the key highlight for the numbers. Lastly, on Sadbhav Engineering, wherein the company has bagged an order for around 1,000 crores, so that should hold up in the green. Back to you.
Okay, thanks a lot for that, Anisha. Suzlon is really interesting, still in F&O despite being a 9 rupee stock. Reema, what about Reliance Communications?
Well, Anuj, a big positive for Reliance Communication because now the company can exit the insolvency proceedings which were initiated against them by Reliance Communication. Yesterday, the NCLAT had stayed the NCLT order which had admitted the company into insolvency. So the key reason for that is because the company has gotten into a settlement with Ericsson. They will be making a payment of 550 crore by the 30th of September, failing which the company can once again get back into debt resolution. The bigger positive for this is that RCom can go ahead now with its stake sale of 18,000 crore rupees to Reliance Jio, so bringing down Reliance Communications debt, and it's a big positive for lenders as well. On a side note, the company came out with numbers on the back of a huge impairment loss. They've reported a net loss of impairment charge. They've reported a net loss of nearly 20,000 crore rupees in the March quarter. But the focus will be on the company exiting insolvency, so in the green for RCom.
Yeah. That's point. I guess at the moment the losses won't matter. People would know that the losses are going to be huge, but it is the relief from NCLT which is very significant for RCom.
Okay,
and for the banks.
Yes, in fact, this week has been really good for RCom. It's gained almost about 25% and looks like there could be some more today. Thanks, guys, for that. Here's a quick recap now of our top stocks to watch. Expected to gain today, names like HDFC Bank, Exide, Avenue Supermarts, ICICI Bank, Sale, Apollo Hospitals, Berger Paints, Torrent Pharma, WPIL, Relcon, KNR Construction, Suzlon and Sadbhav Engineering. While stocks that could be under pressure today, ONGC, JNK Bank, V-Guard and Deepak Fertilizers.